discuss the impact of elections outcome on Indian rupee. The rupee fell to its all-time low last year following dollar outflows from emerging market and then appreciated to 59.49 per dollar, which happens to be the strongest level since July 29, 2013. The rally is aided by fund inflows into equity markets. The currency markets are on a happy high with expectations of a stable government at the center, and the rupee will continue move towards striking distance of 59 if the forecasts turn out to be correct. The strength of the rupee comes from the optimism that foreign currency inflows will increase significantly and immediately as soon as the NDA comes to power with a clear majority. The post-poll voter surveys suggest that the world's biggest election exercise will lead to the formation of an NDA government at the center. This is expected to break the policy logjam and lead to faster decision making, especially on the infrastructure front. Many see the Gujarat model as successful implementation of policy and its applicability on a national scale. This, along with the BJP's investor-friendly stance, has given confidence to business and investors alike, and expectations are pretty high. As far as the fundamentals are concerned, after an aggressive year for the rupee, which took its toll on growth, inflation and investments, exchange rate stability will once again encourage in foreign investments. Standard & Poor's has already indicated that it may upgrade India's outlook if the new government addresses some of the country's fiscal and economic challenges through steps such as clearing of GST. As far as the market expectations are concerned, the market expectations are pretty high. Markets are hyper optimistic, and the new government will really have to move firmly and quickly to deliver growth. The wide balance of payments gap is still a challenge for sustained appreciation of the rupee, but if unexpectedly there is a fractured outcome, it will hit sentiment hard and push the rupee back to 64. However, that seems too remote a possibility after the unanimity of the exit poll results. Also, a sub-60 rupee level makes our exports less competitive in a difficult global market, and that is where the RBI will have to take steps to maintain balance. As far as the rupee outlook is concerned, the outlook is pretty positive, and we expect the rupee to strengthen after initial volatility in the next several days. With a stable government, India will once again be an attractive investment destination among emerging markets. Finally, to maintain export competitiveness, RBI will be forced to cap upside movements beyond 58. That is clearly a level to watch out for. To sum up, the rupee will get closer to 59 and then even 58.50 in double quick time if the post-poll forecasts become a reality. However, as the election dust settles, rupee is likely to take its own course, driven by the global and domestic fundamental factors.